Okay, so in this video, I'm going to go ahead and explain how to use the Fibonacci properly and how to actually use it in combination with this. So this is in the Discord, and it basically says how to do analysis, right? So it goes down from 4 hours to 1 hour to 15 minutes, which means you'll see right here that on the 4 hour time frame, we're looking at the direction, key levels, supply and demand. On the 1 hour time frame, we're looking for a bunch of things, right? And the 15 minutes is going to be a confirmation for entry, which is usually how you're going to apply your entry model. Now, specifically, I want to look at Solana because this is a trade that recently happened that I was looking at with Dom. Now, I'm going to go ahead and apply everything on this screenshot right here, while also including this the Fibonacci retracement, right? And pretty much it's going to show you how do you set it up, what to look for, and essentially it's this is in itself a strategy, right? A lot of people have their own strategy. I think this one is a really good one because it does give a lot of context as to where price is, and you also have a lot of confirmations and confluences that really really it gives you a good trade setup, right, with very minimal effort in my opinion. I think there are some strategies out there that utilize too many concepts, while this one utilizes a few things, specifically market structure, one indicator, and really just being patient, right? Planning for this trade before it happens. So if you look at this this setup right here from right here, so obviously right here, if we can see Solana went up, right? So that's pretty much what we're looking at right here, okay? So essentially what we're trying to do is wait for the price to come here. That way we can target higher, right? Essentially what happens over here. So I'm going to go back to it starting from over here, okay? Because this is where the move happened, right? So in this case, we're going to be focusing on a bullish trend. And so we're going to be looking for a swing low and a swing high, right? If it's a bearish trend, we're going to be looking at it this way. If it's a bearish trend, we're going to be focusing on this structure. If it's a bearish structure, we're going to be focusing on this over here, trying to go short at a premium. But if you have a bullish trend, we're trying to trade with the trend, right? Which means we're going to be trying to look for this setup right here, right? We're looking for a continuation pattern, whereas this one is also a continuation, but the continuation to the downside, right? So looking at this, so let me go ahead and copy this image one more time. And we're going to look at it. So obviously it says go in the 4 hour time frame, look at direction, look at key levels, etc. Right? So what a 4 hour time frame. Right, so if we look at the 4 hour time frame, we can see that the direction right now is clearly a downtrend. Right now, specifically, I want you guys to understand this, that right here, as the price is trending down, it's leaving a lot of lower highs right here. Okay, these lower highs are basically liquidity. Okay, just a heads up. So essentially, what this means is that price is likely going to take out these highs eventually. Right, at some point when market structure shifts, we're going to see price take out these highs. We'll probably put that right here. Yeah. So these highs right here, just liquidity, which means when the market reverses, it's going to take out these highs. Okay. And then it said, let's go back to it, supply and demand, right? So if we look at this, we can identify demand to be right here, right? So this is going to be our demand, 4 hour demand, okay? Now if you want to be more specific, you can go from right here. Right now we have more touches. We have 1, 2, 3, 4, 5, 6, right? Just for the sake of trying to capture more touches, I'm going to make it slightly bigger, okay? And this would be a good box, okay? Now it does look kind of big. It's about a $5 difference. If you want to make it more precise, go in a lower time frame. We can easily do that just like this. Boom, right? So this is obviously going to be our demand, right? Next is key levels. Now key levels, in my opinion, is similar to demand, where you really just want to focus on capturing historical points that are significant in the market. And when I say key levels, it's essentially kind of like supply and demand, right? It's like when the price, let's say price gets rejected here, as a strong move to the downside, right? This is a key level, right? This area right here is a key level, right? When price returns there, the likelihood of getting rejected is pretty high, okay? So same thing if the market is trending down, right? If the price comes back down here, you'd expect a reaction. Even if price sweeps slightly lower, you still expect a reaction here, okay? So we've already established that, just going right here, right? Now, we also want to look at, let's go back to, so key levels, supply and demand direction. We already know directions going down, right? But we also know that these highs right here are liquidity, okay? That's really important to label, right? Because you really want to know that there's something to target to the top, right? Or to the upside. And so while we have this liquidity, we also can see that we have equal highs right here. Oops. And if you guys know what equal highs are, it's liquidity. There's a lot of orders resting above these highs, and so price will like to take this out. Once price shifts from here, or even if it goes slightly lower, right? Price is going to want to take out these highs because there's a lot of stop losses above these highs, right? So this area right here, you have equal highs, right? And aside from equal highs, this is something that's really important. Is that if you see a body like this with a wick, inside of this wick is an imbalance, okay? And if you guys know imbalance, it's like a magnet for price, right? So it's basically like a fair value gap. So this, I'm just labeling levels right now, is essentially what I'm doing right now, okay? Key levels. So I have an imbalance right here, which is acting as a magnet for price. Now, price is not just going to go up here, right? It has to actually give us some sort of market structure shift down here to even target above these highs or above, to this fair value gap right here, right? So now that we've labeled our levels, right? We have our magnet, we have our imbalance, we have our equal highs, we have our 4 hour demand, right? You can color code if you want. I'm not going to do it for this case. Now, if you go on the 1 hour time frame, this is where we're going to have to do some analysis, right? So we're on a 1 hour time frame. It's asking us to look for a trend, reversals, order blocks, fair value gaps, liquidity, and 15 minutes confirmation, right? So 1 hour time frame, I can clearly see we have a 1 hour fair value gap. This is actually a really good thing because if market is going to shift or it's going to go back up, right? it's at least, at the very least, going to want to go here, right? Which is already a good sign, because if your idea is I want to go long at my 4-hour demand, I now have something to target, okay? Now, this is not where you just take 100% of your profits. This is where you're just going to watch for a reaction. You might take some partials. You might even close the position completely, right? But you just want this fair value gap, right, or this internal liquidity to be above where you're about to enter, just so you know that price is going to want to gravitate to this area. This gives you actually more confirmation, more, it should boost your confidence knowing that price will come back here because it's a imbalance, right, in price. So obviously, I'm not sure if this is the bottom yet. This is where you have to look for your entry model. But right now, we're just focusing on identifying the, our liquidity or fair value gaps in our order blocks, right? And above this gap, you have supply, and above this, you have equal highs. You have liquidity, right? Remember, I got this on a 1-hour time frame. So if I want to be specific, this is 1-hour time frame. This is a fair value gap on the 1-hour time frame. Okay. So just like that, I've already done half the work. I understand my direction. I know my supply and demand. I know my key levels. I have my liquidity, my fair value gaps. Now my order blocks, not yet. My trend reversal, that's where I'm going to be looking for that. So right now we're still looking at we're still in a downtrend, right? But we've done half the work already. Okay. So if we're going to enter long, we want to do so inside of 4-hour demand, which means now we're looking for confirmations. We're looking for bullish price action, right? And essentially, we can also utilize the indicator to give us, to give us a sign or give us confirmation where it's the best time to enter, right? Because if the price is right here, but the R side was all the way up here, we're obviously not going to be entering the market. That doesn't make sense, right? You're going against, an indicator, which I should add, indicators are lagging, but at the same time, if you follow your rules, right, if you always buy down here, the likelihood of you becoming successful in trading is much higher, right? Because you're buying, for example, right here, if you bought right here, you sold up here, right? So it's that same application where if you're buying down here, you're most likely going to be getting a good entry, right? So just based off this, we can already see that the price is bottoming out, and we can also see the RSI is also bottoming out, right? So this is where you just have to look for bullish price action. So in this case, we have bullish price action, right? Now, if you're going to enter this, so let's look at this. Ideally, this is going to be your take profit chart. Now, if you're actually trying to trade this, what's it called? Oops, it already played out. Yeah. Let's go back, because I already made this chart. Okay, let me turn this off. So if your idea is that you're going to enter right here, right? Now, it already played out, but this is how we're going to get the entry. Now, this is the exact same chart. So right here, we can clearly see that. So let's actually analyze here. We have a range, right? We have a veiled deviation right here because the price broke below it, if you see it. If you guys don't know what deviation is, it's basically a range, and then you have a manipulation to the downside, and then a reclaim of that level that was lost. This level right here. This would be, so this circle, or this right here would be deviation, this would be reclaim. Essentially reclaiming the previous support. Now in this case, it was a failed reclaim, which price then led lower. So if you actually look at it, we have a low, lower low, and a lower low, right? In order to confirm that this is a liquidity sweep, we'd obviously have to see displacement, and we would have to take out this high. So what does this even mean? What does this mean? Essentially, what this means is if you're going to enter here, understand there's a possibility of you getting swept out once it goes up, meaning it can go like this and like this, okay? Now, in order for this to actually be a breakup structure and to be manipulation where we're going to target up here and up here, we do want to see a higher low form, right? So right now we still have low, we have lower low, and we have lower low, right? So essentially, we want to see a higher low because now you have a breakup structure, right? And now you have this higher low to bring price higher, which then gives you a high and then a higher high, right? That's all we're looking for. So what is this? What does that even mean? So where's the entry? How do we know the entry? The entry can really be placed after this bullish candle, right below this low right here. Okay, so this is essentially going to be your protected low. How do we know it's your protected low? Because price failed to swing below it. Okay, if they were going to take this out, right, it would have happened already. Now there's a chance it will, right? Assuming we get rejected from this fair value gap, because then you'd have another lower high, right? So let's say you enter here, you put your stop loss below this. Okay, your first TP is really going to be the fair value gap, or even slightly above this high. Okay, but this, I have to say, this is more of the aggressive entry. Okay, once we get up here, now we have a breakup structure. Okay, this is where we are going to have to apply this right here. We're going to have to apply this. So if you look at it, we have price going from a downtrend, or let's go back over here. Price going from a downtrend back to an uptrend, right? And now we really want to see price pull back into our discount zone, but we need a confirm low and a confirm high. So right now we have a confirm, we have a confirm low. Okay, we're waiting for a confirm high, right? Now how do you get a confirm high? This, the R side itself is already overbought, so we're going to be getting a confirmed high pretty soon. Okay, so watching it, let's wait for price to get rejected. Okay, right here. Okay, oops, that happened way too fast. So right here, assuming this is a confirmed high just based off this divergence right here, this is where we can see that price is starting to weaken. This is why trading one coin is important, because if you're not trading one coin, you're going to miss this. Okay, as soon as you get the signs of a weak, you see this bearish divergence, right? This trend is weakening. Now you have a low, a confirmed low, and a confirmed high. Does that make sense? Now all you have to do to grab this entry is, now remember, we're still in the 4-hour demand. We identify our discount zone, right? We've identified our discount zone. Inside our discount zone, we have a fair value gap. Okay, if you see that gap right there. So now we could get rid of this red gap because we've already validated, we've already broken above it. Okay, so now that we have a confirmed low, confirmed high, right? Now let's say that price just taps, like let's just say the next candle goes like this, and then it goes down. Well, then all you have to do is adjust this to here, and now you still have your discount, right? So now you're just waiting. Can we see price tap this, right? And then from there, we already have a break of structure, okay? Now, we really want to see price respect this area, meaning we don't want price to go right below it and just, we pretty much don't want to see price to do this, right? We want to see price respect this zone, and start to reverse from here. Then we can really see price target up here and even up here, right? That's really how that's how price is gonna make its way up here. If it goes down here, you're really essentially saying we still have a trading range and we have a range low, right? But if you want price to go up, you want to see higher lows because that's indicative of an uptrend, okay? So this is low, lower low. We want to see price form a higher low, okay? Now in terms of, if we go back to this, going back to the screenshot, I don't even know where it's at. I don't know what happened to it. But in the screenshot, I said go to the 15-minute time frame for confirmation, right? So after we've done this, after we've identified our discount zone and our fair value gap, all we want to do is go on the 15-minute time frame, right? And now we're not focused on anything else except for this. We're really just going to focus on our discount zone and our fair value gap, right? Right here, we can just see that price is distributing, it's just ranging. So you're not going to look for a trade in here, right? We do not trade price action that looks like this. It's just not something we do, right? We want to see price go into a key level. Okay, so this is not, this is a non-trading zone. This is distribution. Price is likely going to get rejected from here. You have a massive imbalance right here. Okay, there's a lot of liquidity down here. Okay, so we already know it's going to go down. So let's just watch it. So from right here, you can see it's oversold, right? Before the pump, right? We can see that price is oversold, hit our discount and our fair value gap. We see bullish price action. Enter the trade right here, stop loss right below. And then now you target above this high. Now specifically to get your target, I'm going to show you how I do that. But place your stop loss right below the discount or even right below the fair value gap. Let's go back to the 4-hour or the 1-hour time frame. So from here, okay, what are you going to do? Your TP is really going to be above these highs right here, above this high, okay? So I'll put my TP above this high. Now, if you want to get a TP, okay, we've already done the work. So while this trade is happening in real time, there is a way to get some TPs much better than the way I did it, okay? Which I'm going to show you so you guys can actually see how I actually incorporate everything all together. So let's go back to this. So this trade happened over here, right? So it was right here. So let's go on a 4-hour time frame. If price is going to reverse from here, don't we want a confirm high? We have a confirm high. Now is this a confirm low? That's where we can draw a fib from this high to this low, right? So now we have an area we can target. Remember, anything above 618 is going to be your higher time frame premium. So just like that, we've already identified a premium, okay? With this premium, we can go down to a lower time frame, right? And now we can even see above this premium, we have some key levels right here, right? If you even look at it, this is a key level right here. Let me go to a higher time frame just to show you. Why is this a key level? Look at how many touches we have over here, right? Resistance, resistance, right? So this is a higher time frame resistance. So essentially, if you're really going to target anything, you want to target above this high because we haven't swept this high right here. So this is going to be liquidity right here, okay? So let's make it a little more precise, just like that. And we want to essentially see price take out this high because we haven't, right? And you can see right here, we actually tap it perfectly. So let's go back to the actual setup and we'll see what that looks like. So remember, all I did was use a Fibonacci retracement. And essentially, we just want to see price take out this high. And then right here, you can see you have a sweep, okay? Now from here, this is the technical TP if you're trading ICT, okay? Now if you're an analyst who doesn't just rely on ICT and let's say you are, you have a bullish bias, well then you can easily keep holding, but ideally this is the take profit for ICT traders, okay? Now if you want to see price continue to go up, you want price to respect this fair value gap right here. So we're going to draw this fair value gap right here and we'll see what happens. Okay, it looks like we went straight to our magnet. Now if you go back to this is exactly where our higher time for premium is. Look at that, look how perfect that is, right? Now just to show you guys again, remember this is a 4-hour confirmed high, right? And this is a 4-hour confirmed low, okay? Remember, the first entry down here is aggressive. This is the actual entry you should be taking, okay? This is aggressive, this is safe, cool? So now that you have this confirm high, confirm low, you just drive this Fibonacci retracement from this high to this low. And just like that, you can see that price touches our 0.77 perfectly. Let me draw this to the right. There you go. Right, we touch it perfectly. And then from there, taking profits, like I said, ICT traders will take profits here. If you're an analyst, you might be able to capture this move up here. But from here to here, you've already got a $10 move. Let's see. From here to here, that's already a 4 to 5% move. So that's already, a good 100% move, 80 to 120% move, right? And essentially, that's what our trading chart should look like every single time we're taking a quality trade. Once you take a trade like this, you shouldn't have to put so much effort to take another one. This is a high quality trade. You repeat this 10 to 12 times a month, you already have, the formula to becoming a profitable trader. It's just repeating this step 10 to 12 times. And yeah.